Okay, welcome everyone to the Pro Trade Room Plus, the U.S. Jobs Report. My name is Lee Goldstein, the Trading Director of 10-Minute Trades. Please remember, all the trades we discuss are for educational purposes. I'm not a financial advisor. It is possible to lose money trading futures, so please trade carefully. First things first, unequivocally, we have to remove the family money trade. This is not a family money trade today. The risk is very, very high. So I just want to give people a heads up about that. Not a family money trade. Right now, the markets are obviously they are significantly down. Trade wars don't work. It's just the reality of life. And unfortunately, there is a trade war, and hopefully it'll end soon. And right now, the markets are reacting to the news of the day. The news of the day, this is a lot like the pandemic in some ways, where the news of the day is so powerful that it overcomes the news reports and it makes for unnatural reactions in the news reports. When you add that on top of the just general, if we're honest about things, if we're honest about the general difficulty in trading breakouts in prop accounts, even when things are normal, it makes it extremely difficult to have good reactions to breakouts with our prop data feeds. So that, on top of the fact that brokers are raising margins for this report, data feeds are difficult. There's a trade war that the news is creating incredible market volatility. So you put all those pieces together and you have unnatural news trading. So you could look at all your testing, but the testing does not really apply today because we're not in a normal market. Testing is great when you have normal markets. So there's a couple of things you can do when you don't have normal markets. You could trade after the news. And we have a lot of setups in the software that allow us to trade after the news. Now, I'm going to remove the ES chart. I was just looking at the ES because I just wanted to see how down the markets were after the Chinese tariff news. So I will look at bonds, even though, like I said, probably not the day that I would personally trade cash accounts on this report. The reality is, if you damage a prop account, you don't lose that much sleep unless it's a prop account that you've spent 2 months or 3 months building up and it's ready to get paid. That's a different animal, right? But if you're have a couple of new prop accounts that you're just working on, then having a lousy trade, you know you're sorry and you're disappointed, but you just go on without significant concern. That most of us are buying the prop accounts on sale. So just to give you an idea, if let's say for instance, I'm going to probably trade this normally in my prop account. I have a reasonably new prop account that cost me about $30. If I have to reset it, it costs $39. I would rather lose $39 on a reset than $400 to $500 on a bad breakout trade because the market might be too risky today. So that's the beauty of prop in a risky market. With cash, if you're trading cash, it's clearly going to be better to trade after the news today. And you might want to trade with micros because the margins will be up even a few minutes after the news. I believe they keep them up 5 to 10 minutes after the news event. So, if you have a small funded cash account, that means margin increases will not always allow you to trade. And that's pretty much the way the brokers like to do it. They want to keep themselves safe. That's probably the main real purpose of margins being raised. Do we recommend them? So, TJ, I definitely recommend them because they do let you trade the riskiest of the riskiest reports, and you can really pick and choose where you're going to trade your cash account. So I have not been trading a lot of cash lately, but I'm getting ready to start trading cash for earnings. So earnings start next week, and the best of the best earnings, I'll definitely start trading some cash. Because I think even in these markets, earnings will still move the markets. I think a lot of earnings will probably be negative, right? That's a problem. That earnings are probably going to be pretty darn negative because, you know, things are coming to a standstill in the economy. People aren't going to spend. Inflation is going to rise. Consumers are going to recoil when they see the prices of everything. This is not going to be good for the American consumer. This is going to be incredibly inflationary, um, and it's going to be very, very difficult situation. And so I think earnings are going to reflect that in the guidance. That's where earnings will get difficult. The guidance. And a lot of folks don't even know how to guide because there's so much uncertainty and chaos. So it does make for difficult trading, but definitely trading after the news is a possibility on the big reports where they raise margins in particular. So definitely a collection of cash and prop is a very good way to trade. What time is Powell speaking? I didn't. As of now, they're not even going to have any more rate cuts because of what's going on. The Fed is gonna watch carefully because they are very conservative. And if we look at Forex Factory, let's see what time, if it's on the calendar. 11:25. I'm seeing it on Financial Juice. So if you're a discretionary trader, 11:25, you might want to come into the, start trading. Not start trading, but you could put up your platform if you're not watching it before that. So it looks like Powell's scheduled at 11:25. There's a bunch of Fed people that are going to be talking today. Let me see if sometimes they're scheduled to talk and it's pre-scheduled and it's scripted. So if you look at Forex Factory, Powell scheduled at 11:25. If you click the So it doesn't look like it's necessarily scripted. Audience questions expected, so it should be interesting. He's due to speak at 11:25ish. So in Ninja, I have quite a few different charts available to me. I'm going to watch ZF because ZF and ZN are one of our setups for this report. And unfortunately, with bonds, you can't trade bonds in the prop accounts. At least most of the ones that our folks are using and most of our members are using. They just don't allow it. Just like they didn't allow corn. Bull and Ox didn't allow corn, and I believe Apex does allow corn, but not bonds. Nobody, none of the popular, or at least the three that we are using, most of our members are using Bull and Ox, Lilu, and Apex, are not currently allowing ZF, ZN, ZB. They did say it was temporary. Obviously, it's not. Bear with me. I just want to look at the news. Now, don't really have any interest in trading the Canada report. So they're looking at 137,000 on the payrolls. No idea what this report's going to be like. What I've been hearing is people are expecting, um, in this particular report, for the job market to look okay. But I think that what we'll probably start to see is the job market start to fail in the current economic condition. I don't think that companies are going to be hiring. I think there's going to, it's just so I think this report is looking back, not looking forward. And it could, who knows what the response is going to be. It could be muted. I certainly don't expect a huge response, but I don't trade it expecting anything. So the question is, how do you trade it? So I've got bonds in the center, gold on the left, micro gold on the right. And I'm just thinking MNQ might be good to look at on the right, MNQ 0625. If you wanted an unusual setup that's not on the DMM, an 80 bracket on the MNQ with a 200 tick stop. Very honestly, I would not promote trading breakouts today. That's my gut feeling. I would not promote trading breakouts today. I got hurt trading a breakout on ISM. Um, Ironically, the MNQ breakout did work. The thing about trading the MNQ is, it's 50 cents a tick. So you're not going to get killed. It's not going to blow your account up the way a regular trade can. Now, the one thing I would say is, just watching the gold market, it's not crazy volatile like it was yesterday. China made an announcement, the market changed. That was a little bit ago. And right now, you are watching the gold market. Here's our setup. Now, the bracket's 30. So it is a breakout. I'm just saying to everyone who's listening, watching, if you're going to trade the breakout, just I've said what the risks are. And the risks are possible poor data feed response. Um, so that could create a whipsaw or a fill at the top of a candle or the bottom of a candle, right? Um, Charts could freeze. The platform could freeze. When that happens, it's not the data that freezes. It's just the platform. When we tried to trade the tariff announcements, the charts froze for minutes. I never saw that in my whole life. Never saw it in my whole life. But when you're looking at gold, a 50, if you want to know the truth, 100 tick stop is really the proper stop for gold. That's $1,000 per contract. We have 50 on the report. 50 is a big stop for gold. And right now the report's been a 50%. It's been a 50%. The 100 tick stop would have kept us safe last month. Last month was a stop because it was an 80 tick whipsaw. The 100 tick stop would have kept us safe. There was a very good reversal last month. So here's the setup. It's a 30 bracket, 829.59, two positions, targets anywhere between 10 and 50 is what I would use. Look, there's been some very big moves, but it can be very, very choppy and whippy on the move. So the idea on this report, especially today, is to get in and out with a profit reasonably quickly so that you don't get caught in a chop that reduces your profit. So I'm not using gigantic targets. Activating at 829.59, the bracket is 30. And then choose your targets anywhere between 12 and 50, keeping in mind that if you go for the higher second target, you'll undoubtedly have to manage your way out of the trade. And then I'll set the time for a moment at 0 to show you that I don't think the bracket is that volatile. So spreading the chart so the bracket has some space. You can use the adjust button if you had to center your bracket. Okay. But a 30 bracket right now should be okay. If we get a normal move and can get a fill, it could be a really good report. The thing that we don't know is there going to be a normal move today with everything going on in the news? Those are the issues that we don't know. That's what creates increased risk. So I'll trade that in my prop. And I'll also put on a secondary setup. It's like putting on a second breakout, but instead of choosing breakout, I'll choose reverse continue. Just one gold position, same chart. I'll put a big target, 50, and a 35 stop. And now gold's getting more volatile. Now keep in mind also our charts are wider. So a reverse continue just with one position, 50 tick target, and a 35 tick stop. And I will put that on the same prop account because it's on the same chart. And I always label everything. That will be labeled GC reversal. Now, all of a sudden, honestly, gold is getting much riskier, much riskier. So the breakout is on. So look, there could be a gigantic move on gold. So I'm going to use a 40 bracket on my breakout, a 40 bracket. I don't think we're going to see small moves today. The big question is, will it be a burst or will it just chop? Hang on, so let me make sure I have this in the right place. I'm just checking that 40 bracket for us. Okay, there's our bracket. Now, keep in mind, 40 is not that big. We do earnings trades with 65 and 75 brackets, and we have great profits. So, big brackets are fine in a market that is appropriate for it. Just putting my strategies back on the correct account. Putting chart trader on the correct account. Enabling both. Need to make sure, don't forget to put your time back. Okay. Let's put our time back on the breakout. 829.59 on the trigger with a 40 bracket. Enable your trades. Now, the bond trade, just testing that in sim to see how it behaves. That's a breakout. 829.58 on the trigger. The bracket is 7. I'm trading ZF. Looking at ZF, not ZN, it has lower risk. I'll use a bracket of 8, 829.58. The stop, 20. Break even minus 3 on the target one stop move. And targets of 7 and 15. So the bonds, 829.58 on ZF 625, 829.58, bracket of 8, targets of 7 and 15. Break even minus 3 on the target one stop move, a 20 stop. We'll do a quick 0 time to look at the width of the bracket. Okay, so there's our bond bracket. Looks manageable. Putting bonds back. To 829.58. Now I also have an MNQ chart. And what I'm going to do is set up an MNQ on a different Bullinox account just with a reverse continuation, not a breakout. We don't have a tested MNQ at the moment. So I'm setting it up as a reverse continuation. and I'll do a target of 25 ticks and 50 ticks. Move my stop to break even if it hits the first target, and I'll use a 100 tick stop. MNQ. MNQ. Just setting it up as a reversal continuation. I'm trading multiple positions, and I'm trading two positions with a target 25 and 50. But keep in mind, this is random. It's just a setup so that if there is movement that turns into what looks like a trend, you can take a trade that takes place after the news. You don't know unless you test every single report to look at reversals on the MNQ. Look, we haven't tested MNQ reversals or continuations on this particular report at the moment. This is just a reverse continuation trade so that if there's movement on the MNQ after the news, we'll trade it if it looks like there's a profitable opportunity. So Calvin is saying when he got errors the other day, he thinks it might have been related to having two data feeds connected. So I think it's just related to the difficulty of a fast, crazy market. So just to recap, gold breakout, which is highly, highly ultra risk, very strong possibility, like the ISM report, that the breakout won't work well. MNQ possible after the news, all the way on the right, watching the bond test in the center just on SIM. Funny thing that I've seen over the years sometimes, and you don't know what really is going to happen. Sometimes when you're expecting the most volatile reaction to an event, you get the calmest, most non-reaction that you've ever seen. We have seen that lots of times. But I think, if we have another not well filled data feed on a breakout with gold today, then when the markets are this crazy, we'll definitely refrain from breakouts. Sometimes what happens is the orders show up on the chart and they just don't become tradable. They have a funny color. Okay, 10 seconds. I'm watching gold on the left. So just exactly what I thought would happen with gold. Bonds. So the news Way more jobs than originally. Unemployment rate is way up though. Gold was unsafe, which we really kind of knew that was going to be the case. Gold was unsafe. Bonds went positive. So it looks to me like bonds weren't safe either. Let's watch the MNQ because bonds were sim, and that doesn't have a lot of meaning. It didn't have a proper reaction and place the orders even properly. Just watching the MNQ here in live, but you could understand the breakouts not recommended. We didn't recommend doing. I just wanted to see if it was even possible to trade a breakout in these conditions. We now know that it's really not with gold. Bonds, just watching the NQ, it's really the MNQ. I think that what we're probably looking at is even though the unemployment rate is higher, that's bad news. The jobs number is much higher, and that's creating chop in the MNQ. You notice it went up for a moment, but it's really difficult, I think, to choose a direction here. Look at looking at the MNQ, I'm not convinced of any direction. What the issue is also is the market is so negative. If you put the MNQ on points with net change display, because that's how they calculate the MNQ, it's down 500 points. So do you think an up move is going to have much power? That's the question. Is the up move, and now, it's pulled back already quite a bit from that original pop on the news. Now, what I'd like to do is change my chart. Let me just turn off now. The MNQ looks like it's pushing up. So, how much do you want to risk? Do you want to risk? Do you want to chase it? I'm not sure I do. Not sure I want to chase it. I'm watching the squeeze on my left chart. Squeeze is positive. So I'll do a little chasing here. I'll put my stop under the candle burst. It hits my first target, takes me to break even on the stop. Okay? Break even on the stop. Okay, a quick scalp on the MNQ. This is probably the better way to trade when the markets are the way they are. Bonds breakout in sim clearly wasn't safe because it didn't even place the orders properly. Gold in prop, unsafe, which we knew that was going to pretty definitely happen. So what's your best way to trade? Choose the instrument you like the best, right? If you're an ES trader, trade MES so you could survive if things go wrong, 0.625. Make sure you have something that helps you with trend. I like the squeeze for that and a 30-second chart, okay? I changed over my MNQ chart on the left because I didn't have a squeeze on my right chart here. Okay, I didn't have a squeeze on this chart, and I wanted the confirmation of the squeeze going up in order to take the long on the MNQ. Okay, So we had a positive trade on the MNQ scalp. The squeeze had just started to the upside. We had a failure at S2. It went right to S2, the pivot. But look, you want to be extremely careful. If you make a little bit of money trading some scalping on a report that now what you're dealing with, the report has been absorbed, and now you're dealing with a market that's tremendously bearish, right? The market is tremendously bearish. So what often happens is this news is probably not meaningful enough to create a bullish trend. So trading to the downside is probably going to work better. 30-second chart for the squeeze is even better than the 1 minute. It's starting to blink negative, right? It's all a question what you're willing to risk, how good you are at scalping and finding direction. But now the squeeze is pushing down. I would not be interested in a long currently on the MNQ. But scalping in these markets is unbelievably risky and difficult. It's hard. It's hard. Okay, Nitin, good to hear that you were able to trade ZN in Take Profit Trader in your prop account. They allow it. Now it looks like the MNQ is heading down, the ES heading down. The other thing you could look at is you could be very patient and wait for a test of the low with a magnet setup. You could wait as the price sells off. If it continues to sell off, as you get closer to that low of day, you could trade looking for a magnet. You could also use the VWAP as a magnet, as a custom magnet. I think what we'll do is a magnet webinar next Thursday, again, just to go over how to set it up. But it does look like down is what's going on here. Push up. So immediate profit on that scalp. That was like instant to the downside. I didn't even get a chance to move my stop and orders to make them bigger. I was trading, so that was an immediate downward profit. You could just feel the market sinking. So I think that this magnet is going to happen at some point. It might be reasonably quick. It might happen before the open. These markets are not going to be positive, it looks like. Let me just go over the reverse continuation that I had set up on the NQ. So what I had set up, I'm just going to move it to my left chart also. I had two positions on position 1, 2 contracts, and 1 position on position 2. And I went for 25 ticks on position 1, 50 ticks on position 2, 100 tick stop. And I moved my target to break even when my first position got hit. And it never reversed and took me out on either of my 2 scalps. On my second scalp entry, I waited till the red candle was moving up and it was green for a moment. And thinking we had a very, very negative market, I sold it on green, which I normally don't like to do, but in this market, one green candle probably is not going to make for a long trend. So setting up that reverse continuation, I'm going to remove my breakout. I had 2 positions on position 1, 1 position on number 2. I had a 25 tick target and a 50 tick target. Not greedy, but not tiny in this market. 100 tick stop. I'd probably go 150, so the trade has room to breathe. Remember, it's 50 cents a tick. It's 1/10 of $5, which is the normal NQ. Margins should be back to normal. That's my setup. That's what I used. 2 positions on 2 contracts on position 1, 1 contract on position 2. 25 tick target, 50 tick target, 150 tick stop. Label it NQ REV so you know which strategy it is in the control panel, and choose an account. I was trading it in 8, applied it, okayed it, put your chart trader on that account, and that allows you to trade discretionary on any news, on any event. When Powell starts talking, you could use a setup like that. You could set up, and then I also put the chart on 30 seconds with the squeeze. I like to use the squeeze for momentum when I'm scalping. Now you could see the squeeze is pushing up. I would not take a short with the squeeze pushing up like that. And I like a 30-second chart, and on the squeeze indicator, momentum length is 17 on a 30-second chart. That's the one change I would make to the default indicator. But in this market, breakouts, when news just came out before the event, we've seen how breakouts are not tradable. On gold in particular. One of our members had a positive trade in his prop account using bonds. Bonds are way less volatile to trade than gold. They have much higher liquidity, but liquidity isn't so meaningful in a prop account because it's a sim data feed anyway. It's not a real data feed in most prop accounts. Liquidity is cash related. Any questions? So hang on, folks. I want to thank everybody on YouTube. There's a link in our YouTube presentation. If you want to become a member, you can click the link or paste it into your browser. Thanks everyone for watching us on YouTube. That's our last stream of the week. Hit the like button and the notification bell so you know the next time we're streaming. And thank you again for joining us. We're going to end the stream on YouTube. We'll see you next week. Take care on YouTube.